Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. We're actually going to narrow our focus a little bit down today, and we're just going to talk about one stock. We're going to talk about Robinhood stock today, whether or when is the right time to be buying Robinhood stock. Should you be buying Robinhood stock so close to the IPO? What are the inherent downside risks of getting involved in a stock that really doesn't have that much price history? Because if you know a lot of what we do, everything that we do with order flow and reading the tape has to do with putting together those two core pieces of price action and volume and where they happen. Today, we're going to take a little bit of a different look. Even if you are not an active day trader, we're going to actually break it down a little bit differently, where we're not going to use the daily charts exclusively. I'm going to show you a really super simple system for understanding when the buying steps back into Robinhood after it's pulled back quite a bit. And we're actually going to use that big move to the upside and that pullback to set a profit target. So we got a lot we're going to talk about right now. We're also going to jump into taking a look at sector rotation and the hottest stocks that we saw yesterday and how we're going to take a look at them. So stick around. We'll be back in just 1 second. Okay, so as with everything that we do, this is all for educational purposes. I'm trying my best to point you in the right direction to get around all of the obstacles that I went through and what we go through in our community. And hopefully you make a big list of what doesn't work. And when you come out the other side, that's where trading becomes a heck of a lot easier. So when you buy stocks, you have the absolute unshakable confidence that you know what you're doing. So we're going to take a look. First, we're going to go into sector rotation super quick. I want to show you how it's unfolding over the last day, week, and month, and give you some ideas of where you should be starting to put your focus. And then we're going to jump right into Robinhood stock. I think we're actually going to introduce something I don't normally talk about that much. Is we're going to talk about a Fibonacci tool. Ooh, big word there. Now, normally I don't really jump into indicators like that too often because they are subjective. Very similar to using moving averages, where people will think that just because a stock pulls back to a moving average, that means you have to buy it at that level. And that's not the case. What you use moving averages for, as far as support or resistance or Fibonacci levels or anything along those lines, you use them as kind of an alert to tell you this is typically where a lot of people decide to take action, but you still need to let price action tell you now is the time. So we always let the candlesticks make the final decision. So we're going to jump right over. We're going to take a quick look at the sector rotation coming into the day. So it's kind of interesting. Obviously, with the market making all-time highs, the sectors are looking really good right now from a little bit of a bigger perspective. The challenge we have right now as short-term traders is yesterday some profit taking came into the market one day after making new all-time highs. I just want to come back on the screen there for 1 second. Don't panic. If you bought stocks, you own stocks. This is a normal function of the market. I know the market hasn't really pulled back that much at all. This is normal. It's normal for the market to go up and pull back and go up and pull back. Pullbacks are opportunities to initiate new trades, get better prices, and start to even build a position. So I just want to make sure that we're all on the same page about that. We've had, kind of this kind of market. We're literally off this chart right now. Over the last 18 months, and it's been glorious. It's been an absolute glorious time to be a trader. We're just in a little bit of a different tape right now. We'll finally be pulled back one day. It's not that big of a deal, okay? So moving on over, you can see what kind of day we had yesterday, but this is why we look in multiple time frames. The month has been spectacular, quite honestly. And honestly, healthcare stocks, which are actually now at the top of the week and the top of the month, have really been the stellar performers. There's been, there's mRNA. NVAX attempted to break out 2 days ago, failed, came right back yesterday. Eli Lilly, Pfizer, Moderna, probably the top of the list. We'll actually take a quick look at that. And then we'll actually go right into discussing Robinhood, because I think it's going to be a pretty interesting setup. So if you need a list of some of the stocks to watch, mRNA had what we call now a swing low, which is a low with higher lows on each side. NVAX failed to break out 2 days ago and came right back with the bullish U-turn yesterday. Still looking pretty good, and obviously trading a little bit higher today. Eli Lilly has been grinding higher, also a pretty good setup here. But the one I think that a lot of people have really missed the boat on is Pfizer. And Pfizer just could not have been any more of a simple trading pattern where it finally broke out of this trading range. And once it did, pretty clean setup, right? So what do you do now? Do you hop on board after Pfizer has now had a 3 or 4 week run to the upside? 1, 2, 3, 4, 5 week run to the upside. In this case here, the answer is no. You know, it's interesting. We had I love feedback. If you have any comments or questions or anything like that, don't hesitate to put them below. I love having the comment back and forth. We did have one person though comment yesterday, and I just want to address that because there's two sides of the story. There's investing, which is a much longer time frame, and then there's swing trading, which is a lot of the ideas that we're talking about right now. We're kind of looking for the next move. We're looking for the next push to the upside, tightening up our trailing stop loss, getting out, and then looking for that. We're constantly looking to put our money to work, which is a much shorter time frame trade from investing. So we had somebody comment yesterday, which I'm just going to say, quite honestly, is out of context because they were mentioning waiting for a pullback in a stock, which is what we talk about in some of the stocks that have gone parabolic or 5, 6, 7, 8 days into the move, versus buying the breakout, even despite the fact that it's gone that many days in a row. So I just want to talk about that very quickly, and then we'll get right into Robinhood. Swing trading does not chase price action. And to say that we're missing moves waiting for a pullback is really out of context because a swing trader is looking to buy here and then 5 to 10 days later looking for that to what we call saturate and then start to come back, and then we look for the next momentum move. So buying a stock after it's already rallied for 5 or 6 days in a row is a little bit late for a swing trader. You're waiting for the pause and waiting for the next move. So I just wanted to give everybody some full context on there's neither one is right or wrong, but you have to be absolutely deliberate in which trading strategy that you are implementing. So buying breakouts works. Buying stocks that have gone up 8 days in a row for a longer term portfolio where your stop loss is not within that time frame and for where your profit target makes sense based on the risk you have to take, there's different strategies. So the person that commented on that, I love the feedback, but we're not missing out on trades. You use the phraseology of we missed out on trades of people who didn't buy in 2009. Come on, man, that's 12 years ago. And if you traded through 2008 and 2009, there were a lot of people who were scared out of their minds during that time. And I know I had a trading office in New York City. So I just want to make sure we're comparing apples to apples. Waiting for a pullback in a stock that has rallied for 5 to 7 days in a row is smart trading for a swing trader, but it could be a different situation for an investor. So we want to make sure that we have trading strategies on the same page. Very important, but thank you for the context. Thank you for the comment, actually. I really appreciate it. Okay, so we're actually going to hop on over now to, we're going to look at HOOD. So basically that's what we mean here in Pfizer. It's a little bit late in the move. We're looking for this now, waiting for a little bit of a consolidation before the next move. So hopping on over to HOOD, the biggest challenge right now that traders are having is where do we get back involved in HOOD? Now you can see, I don't have any indicators on my chart. All I have is price action and volume. It's what I use every single day. So here's the first clue. What I want to actually talk about first is, I'm going to move this over, is this day right here. This day where there was heavier volume, and you can see that on the bottom of the chart here on August 13th, heavier volume, which actually is my uncle's birthday, my cousin's birthday, and buying did not stop the stock and see it go down yet. It was one day, it reversed and came right back down. That means that at this moment, the sellers are still a little heavy, but buyers are starting to dip their toes in. And this is a really big part of trading, is paying attention to noticing increases in volume before price action starts to turn around. Because think about it. If you had, I'm going to leave this up on the chart here because it's important. Let's say you had 5 million shares that you wanted to buy. Are you just going to go out there and say, I'm just going to start buying and buying and buying like crazy? No, if there's selling still going on, you're going to keep buying as it's going down. So you're not advertising your huge demand for that stock. And as long as there's some selling, you're going to continue like buy them. You ever see that movie Trading Places at the end where they're basically buying back their stock? So Eddie Murphy and Dan Aykroyd are just sitting there saying, buy them, buy them, buy them. That's what the smart money is doing right now. They're just buying it as there's a little bit of selling. They're buying it as there's a little bit of selling. And when that selling dries up, then they have to step up if they want more shares because they believe the future price of that stock. And that's essentially something that we call accumulation. So that's accumulation in action. So within this price window, and again, everybody's got that window they want to build that position in where they still think it's a good price. So you buy some here, you buy some here, you buy some here with the eventual where you think it's going to turn around, and then you have that position that you built. So we saw that first kind of shot across the bow on August 13th, and selling came back in. So that was probably the first piece. So if you could imagine more realistic numbers for an individual person, let's say you wanted 1,000 shares. So you get in there and you buy 300 shares, but you know you want 1,000. Now that's different from averaging into a position. Averaging in means you wanted 1,000, you got 1,000, and you go get more 1,000. That's bad. When you average into a position of the full size that you already wanted, that's not good trading. Working a position is a little different. I know one of our members of our community, Jerry Sarmiento, who's a really good trader, does this probably better than anybody I've ever seen. He knows the levels he wants to trade around. He knows the full share size, works the position, knows his risk on the whole trade regardless of position size. And then when it moves in his favor, he starts working his way out of the position on the other side. So how does that apply to what we're looking at in Robinhood? So we're actually going to do two things. We're going to use multiple time frames to give you an idea of when is the right time to start getting back in, so you're not bottom picking. And number two, what is the profit target? That's kind of cool too. So we're actually going to discuss how to recognize when is the right time and what would be the first profit target. We never want to put limits of how much we could make, but we're going to put the first profit target out there. So when we talk about buying hood stock, obviously we have this big move to the upside, right? So we're going to use that to our advantage. But first, what we're going to do is we're going to actually go to the 60-minute chart. And this is a big deal because this is actually how professional traders never guess top or bottom. We're essentially looking for price action to tell us when the selling has stopped. So essentially what we're going to do is we're going to draw a trend line from here. Now, this is actual price action, but this is really where most of the volume happened. So we're going to draw a trend line from here and not go through any other price action. So you can see here very clearly that's the highest low prior to the low. So we're kind of like right on the precipice of breaking this to the upside. So what are we looking for? Right now we are looking for on the daily chart. Now that we have our levels on the shorter time frame, and this is key, we're setting this trade up before it happens. That's good trading. So now you're not reacting anymore. You have absolute confidence in what you're looking for. And now we also know why this stock might break to the upside, which is accumulation. Smart money is now like, okay, there's no more selling. They have to step up and start paying higher prices. And that's part of watching order flow. The order flow is coming into the market. And now they can't just sit on the bid, which is basically they're sitting there saying, okay, I'll buy, and they're advertising to buy while it's going down. When that selling pressure dries up, now we have what we call a line in the sand that if it starts to step up, we're looking for a large candle on the daily chart, a large green candlestick that breaks above this line that we just drew with increased volume. Generally speaking, you want to see it'll do at least 1.5 times what it normally does, just to give you a number. And we'll take a look at the chart and take a look exactly what that looks like. So that's the line in the sand that we're looking for to close over on the daily chart. So we go back out to the daily chart, and now we have that line. Now, what we're looking for here on the candles on the bottom, the histogram on the bottom, is we're looking for another day like this, but we're looking for this day to close now above this trend line. So we're looking for increased volume, a large green candlestick, and above that trend line. Now what we're looking for after that, I'm going to take the volume off of that. And now what we're going to look for is a profit target from here to here. Okay, so we're going to use what is known as a Fibonacci retracement tool. And it's something that I don't really use too often, quite honestly, because they're subjective, for lack of a better way of putting it. I don't like to use them because I don't like to guess price. There's really no other way to put it. And whether or not you use the actual tool, you can see, I don't even know where it is on here, Fibonacci retracement tool, or whether or not you just use two numbers, what you normally do is you will go from the low to the high to look for retracement in this move. But in this case, we're looking at a move from the high to the low, looking for a target back to the upside. So we go back into the Fibonacci numbers, and I usually use 50% retracement. So we're going to start at the high and go down to the low. And what we're looking for is what's known as a 50% retracement from this move to this move. Okay, that's the entire move. And that's what a rookie would do. But we're actually looking at the retracement of this move to this move for the next move to the upside. So we actually now have to adjust this for where the next target is, because we're looking for a retracement from here to here and 50% of the way back. So that is essentially around the $65 level right there. Okay, so that is essentially the 50% number. So if Robinhood gives us that increase in volume, closes above this trend line, and closes near the high, that $65 level to the upside is where I'm going to be looking for my first target. Now, again, there's other indicators, profit targets. We have what we call the profit maximizer on the way to the upside. You never want to limit what you could make, but you do need to have an initial profit target to justify accepting the risk on the trade in the first place. And this is kind of what we do all day, every day. We're putting the pieces together. We call it building an argument for an idea. The more pieces to the argument, the more distinctions that you could make, the more if this happens, then this, if this happens, then this, that's where you become a confident trader, which is really everything that we want to have with the market. Because if we're choosing to accept risk, we want to say, I'm deciding to buy Robinhood stock because of this and because of this and because of this. And if this happens and then this happens, this is going to be my first target. If I start to get involved in the position, normally for us, just below that area where we just turned around will be our initial stop loss. So you have your initial stop loss, your initial profit target, and the exact price action between price and volume that will tell you when it's time to get back involved. So all of that selling going on probably over the last 10 days, we're waiting for that selling to what we call exhaust itself, and then for the smart money to have to step up and start paying higher prices. And that's essentially how we look at a lot of stuff. There's more to it, because then there's the B part of it, BEE, what happens between entry and exit. That's where the magic happens, and that's where the money is, because we could set up all of these trades together. But there's still the matter of what happens inside your head. Do you get scared out of the trade? Do you get greedy and take the profit beforehand? All of that is really what trading mastery is all about. And that's what makes trading fun. Whether it's me or whether it's you, there's always a higher level that we can get to as a trader. But this is a good framework. It gives you an absolute to say, if that happens, then I'm doing this. Because Robinhood could just keep melting to the downside and redraw that line. And then when it gets broken, if it gets broken, which it eventually will, then we step back in, and that's when we would take a look to be a buyer. So what's interesting now is we just built out this if-then scenario. It could continue to go down. If it goes down one more day, fine, we adjust. If it goes down another day, fine, we adjust. We adjust the profit target. We adjust that line that we just drew. And if and when it breaks, then we have our scenario. So that's kind of cool. There's no guessing, no predicting. We're letting the price action and volume tell us when order flow has changed to the upside, when smart money needs now to step in and start paying higher prices because of where they believe the stock will be in the future. So if you find this stuff kind of exciting, where we're really just putting the pieces together, click the link below and learn about our 30-day coaching program. I think that it might be something that if you watch this now with me all the way to 18 minutes of the video, you're probably interested in at least learning what it means to be part of our coaching program. And what our training program is all about, because we get into this in a lot more depth. So whether you do or not, I wish you the most profitable day today, the most profitable month. If you have a chance, click down and subscribe. That would mean everything to me. Smash that like button if you found this valuable. And either way, have an awesome, awesome day. I really appreciate you joining me today. Take care now.